Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AST SpaceMobile or ticker symbol ASTS. And so I just recently learned about this stock. I believe it came up in the Discord. If you do want to join that, just reach out in the comments down below. The link does change frequently, but it's free and you're welcome to join. Lots of interesting stocks talked about in there. And yeah, so this one was brought up and I went over this during a live stream and I just thought it was really interesting. So I wanted to go over it with you guys. And so I should note before I get too far into the video that ASTS did close on Friday, May 31st at a price of $8.28, being down a little over 1.5% on the day, but then bouncing back about 1.5% in the after hours, being at right around $8.40 to close the month of May in that after hours trading session. And so what I see in the chart is something that I just recently went over in the Plug Power video, and that is the Elliott waves or Elliott wave theory. And so that is basically that you just see higher lows formed in the stock price as it goes higher, and then eventually you do get a topping signal, basically forming this head and shoulders pattern, and you start to see a reversal. And so with ASTS, I do feel like we are in the middle of that process. So I do think that we have formed wave 1 here, followed by pullback wave 2, move up to wave 3, and then from that, I do think we will be getting another pullback as long as that pullback is higher than the high hit at the top of wave 1. I do think that we could see another move to the next level up. And so looking at this here, as long as we stay above $5.77, I do think that this Elliott wave formation is still in play and that we could be seeing wave 5 moving higher than $9.40, which was the high hit on May 30th, the prior day being $9.35. But anyways, yeah, so I think this looks really cool, and I did want to go over just kind of this structure, how I got these lines. So these are just Fibonacci retracements. I took this one from the low hit on May 13th at $2.12, and then taking that up to the high hit on May 20th, being at a price of $5.77. And from that, I do just have these two lines from that retracement drawn up here, one being the 382 and the other being the 50% retracement, as we did pull back to be right in between those two levels, pulling back to $4 being the low hit on May 23rd, just being about 5 cents above that 50% level, and being, about 38 cents below that 382. And so anyways, from that pullback, we did get a bounce and we did move up higher. And I can also get a measurement to see where we went by doing this Fibonacci extension, going from that approximate low to this high and then pulling back to that low. And it looks like we almost got to the 1618 extension. That's right around $9.91. The 100% level would be at right around $7.64.5. So we hit right in between that range. And so, yeah, from that, we can take another Fibonacci retracement going from that low of $4 hit on the 23rd up to that high hit on the 30th at $9.40. And from that, I do have a number of levels drawn up here, and I'm actually going to change them to yellow so they do stand out a little bit more relative to that prior retracement. And so from this retracement, we can see a number of levels to the downside that we may be finding support at. And really the key is that we need to be holding above $5.77 for this pullback to be wave 4 of that Elliott wave. And then we would get the next wave up to 0.5 here to complete wave 5. And so if we do pull back to 577 or lower, that would negate it. So coming back to the 786 would be no good. That is at a price of $5 and about 16 cents, also corresponding with a gap fill here. And so, if we do see that, then I don't think we will be moving to that next level higher, or we'll at least have to reevaluate at that point. But I did want to point out that the golden pocket here, the 6.5 to the 6.18, that both of those levels are above the $5.77 high here. So if we do pull back to them, I do think we could still be in play for another move higher. But what I view as being more likely, since we pulled back to about the 50% or 382 on this retracement, I could see that as well here. So the 382 would be around $7.34, whereas the 50% retracement would be right around $6.70. And so if we do work with that as an assumption, we are going to come back to one of those levels. I could do this Fibonacci extension going up to that high and then pulling back to, let's just start with the 382 being right around there. We could see price going up to, let's see, if we do go up to 100% or 1618, that could be bringing price up to $12, $13, maybe $16. I feel like that's kind of an over exaggeration, because that would then suggest that this wave 3 here on the way up was not really that big or not that notable, and it does need to be one of the most notable waves in this sequence. And so I am going to adjust this then to pulling back to the 50% level. I do think this will give us a more realistic target. And so let's see, I got that lined up right, just about right there. And so if we do slide up here, we can see that the 786 is at $10.94, right around $11. And the 100% is right around 12 or 12.10. And if we do go up to that 1618, that's around 15.44. And so what I could see happening is if we do get a pullback to around 670, I feel like a conservative run would be getting to $11 a share. And if we do take a measurement of that move, that would represent right around a 60% swing. So going from really like 675 to around 11, 60%. So I do think that's a pretty nice move. And yeah, I mean, I just found this chart really intriguing, really interesting, finding it fascinating, learning about Elliott wave theory. And so I just wanted to share this if in case we do pull back to 670. I do think that's a good dip buying opportunity, but then a pullback to 577, that would be a good stop loss level. Well, it would suck to be taking on a loss here. I do think that it would continue lower, maybe to form an armpit here before forming a shoulder and then creating a head and shoulders pattern and breaking lower. So I don't think we're there just yet. I do think we will see another leg higher, and I'm thinking $11 seems pretty reasonable. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.